we are pleased to launch the Preqin and Australian Investment Council Yearbook for 2020. 2019 was a solid year for the industry, hitting record highs on a number of measures. The report this year covers a wider range of sectors. In addition to private equity and venture capital, we also analyse private credit, infrastructure, and real estate. I strongly recommend you download the yearbook. Here are a few of the key takeouts. The Australian private capital industry reached a record $68 billion in assets under management in 2019, up from $60 billion in 2018. AUM for private equity and venture capital reached a record $33 billion, an increase of 16% on 2018. PE and VC AUM reached $25 billion and $8 billion respectively. Analysis by Preqin found that dry powder across the industry was a healthy $23 billion, with PE and VC holding $13 billion in dry powder. This build-up of dry powder provides Australia's private capital industry with the capacity to continue to fund investee businesses and projects, and to take advantage of opportunities arising from the economic downturn. However, like many markets, fundraising over the period ahead could come under pressure as institutional investors look to reweight their strategic assets and to target allocations on the back of their downturn. Strong flows of capital from domestic and international investors is testament to the favourable reputation of Australia's private capital market as having one of the most attractive risk-return payoff globally. Analysis from Preqin found Australia's private capital industry generated the highest medium net IRR of 15% and the lowest medium risk of 7.7% standard deviations. Another positive finding is that Australia's private capital industry continues to take the lead on responsible lending and ESG. 40% or 150 of Asia-Pacific signatories of the United Nations Principles of Responsible Investment are located in Australia. It is positive to see Australia's superannuation funds working closely with the rest of the private capital industry to drive an ongoing focus on ESG. Having a deeper look at PE, we see the Australia-focused PE AUM recorded the third consecutive year of growth, reaching a high of $25 billion at June 2019. Capital raisings in 2019 were down from the record high in 2018. It comes on the back of 4 years of above-average capital raisings, which has contributed to the $11 billion in dry powder. Aggregate PE-backed deal value remained strong in 2019 at $16 billion, third highest in the past decade, although the number of deals has reduced. Public to private transactions accounted for 53% of total Australian buyout deal value in 2019, with deal activity being particularly robust in the consumer discretionary and healthcare sectors. By value, consumer discretionary represented 52% of deals in 2019, up from 11% in 2018. Healthcare accounted for 37%, up from 30% in 2018. Turning to VC. VC funds raised over $630 million for investment in Australia, the second highest annual total in the past decade. Aggregate deal value was also the second highest on record. Similar to PE, the number of deals reduced slightly in 2019. Early stage vehicles continue to be the most favoured fund type in the Australian VC industry. The 5 largest funds closed since 2015 were all early stage vehicles. The strategy actually accounts for 15 of the 18 Australian-focused venture capital funds in the market. Looking at deals, the IT sector continues to dominate, making up 51% of deals by value and 59% by number of transactions. With agriculture expected to be Australia's next $100 billion industry, it is not surprising that this sector has experienced significant growth. The annual aggregate value of agtech deals has increased more than 7-fold since 2017, from $8 million to $60 million in 2019. Private credit, or otherwise referred to as private debt, is fast-growing momentum in Australia. Alternative lenders continue to be drawn to the potential for attractive risk-adjusted returns and a reliable income stream. This segment continues to expand into parts of the private credit market once the territory of banks. 60% of private debt-backed deals in 2019 focused on senior debt. In summary, 2019 was a solid year for the private capital industry, reaching record highs by a number of measures. 2020 will be a challenging year for some, but with record levels of dry powder, the Australian private capital industry is relatively well positioned. For more insights and analysis into the Australian private capital industry, I recommend you download your copy of the Preqin and Australian Investment Council Yearbook 2020.